Hello traders and welcome to another video review. Today is Tuesday, December 19th, 2023. Let's take a look at the Forex economic calendar today. The most important data released overnight was the Bank of Japan interest rate decision together with the Bank of Japan press conference. As you can see, the Bank of Japan holds the interest rate at the level of minus 0.10%, which means that nothing changes here, and it was of course in line with the expectations. So we are going to take a look at the US dollar to Japanese yen for sure. Now, during the day and during the London session especially, we got the key important data scheduled for release from the Eurozone. CPI, Consumer Price Index, is scheduled for release at 11 o'clock together with the core CPI index and the quarterly CPI index. Just before of that, we got the ECB Arena and ECB Elders on her speeches. At noon, we got data from the UK in form of the industrial trends orders. 1 hour later, we got the global dairy trade price index from New Zealand, and we smoothly go to the New York session. We start with the housing starts data from the USA. This data are scheduled for release at 2:30 together with the building permits. Then the building permits is the one of the most important data for today. And in the meantime, we got the core CPI LMPI data from Canada scheduled for release as well. So the second very important event of the day, building permits from the USA, are scheduled for release at 2:30. Atlanta Fed GDP now data are scheduled for release at 5:30. Then we got a little bit of a pause, and at 10 o'clock, net long-term transactions from the US are scheduled for release, and 30 minutes later, API weekly crude oil stock data. Pretty intense day. Two very important data releases. CPI from the Eurozone. The CPI is expected to drop from 2.9 to 2.4%, and the building permits are expected to decrease from 1,498,000 to 1,470,000. So very interesting data releases for the economy, especially the CPI data. So it's worth to stay focused during today's data releases. Now, let's switch to the technical part, and we are going to start with US dollar to the US dollar to the Japanese yen, of course. What do we have here on a 4-hour chart? The first thing you possibly notice is that we are continuing to move lower, and US dollar to Japanese yen pair has made as recently minus 7.20% decline. Okay, so this is the decline. It looks very aggressive, but it's a corrective in nature. Minus 7.20. So the market will try now to bounce and to return to the uptrend. You can take a look at this very nice trend line of mine. Let me just make it a little bit thicker so you all can see. This trend line, as you can see, will separate the bearish market from the bullish market in the short term. Now, the recent low was made at the level of 140.98. This is the, of course, technical support right now. And the market is trying to bounce a little bit higher. We broke above the 50 periods moving average. Now we are trending even higher. Where is the next target? Technical target is the 144.75, which is the short-term technical resistance. The other very important level is located at the swing high at 146 exactly. That's the technical resistance, and one more is located here at 146.60. So this is pretty neat zone between those two levels. 60 pips, very nice zone for the bears, where they can of course try to pressure the market harder. So that's the key zone that will, of course, horizontal zone that will separate bearish market from the bullish market. Bullish market is above this zone, and the trend line is, as you can see, as well as separator of the bearish market and the bullish market. Momentum bounces from the extremely oversold conditions during the bullish divergence between the price and the momentum. Now we hit the level of 60, so the momentum is positive, momentum is strong, dollar is being bought back up all over the place. Next target, as I said, 144.75, and then 100 periods moving average located at 145.39, and then the supply zone. So that's the outlook for the US dollar to Japanese yen. Let's take a look at the British pound to Japanese yen. What is going on here? As you can see, the behavior is almost the same as it was on the US dollar to the Japanese yen. So we got this trend line of ours. Yeah, so this is the key trend line here. Let's make it thicker. There you are. This trend line separates the bullish market from the bearish market. The most important technical support, 178.33. This is the key technical support for the bulls. The other one is located a little bit higher, 106.78.63. Clear bullish divergence between the lows of the price and the lows of the momentum. Bullish divergence resulted in a three-way movement towards the level of 183.16, which is the level of 100 periods moving average on a 4-hour chart. And the momentum is strong and positive, so we should see higher prices soon. So the next target is the next horizontal target, which means that the next technical resistance is located at 148.30, and just above this level there is 184.44. And of course, as in the previous example, we got this very tight zone here. This is the supply zone where the pressure might get a little bit bigger, and of course this zone separates the bearish market, which is below this zone, from the bullish market, which is above this zone. And as you can see, the trend line is doing exactly the same. So the bulls will need very nice momentum. They need to be stronger, they need to be quicker and more aggressive in order to break above this zone and then establish a bullish market in the short term. So that's the outlook for the British pound to Japanese yen. Let's take a look at the euro versus the Japanese yen. As you can see, those markets are behaving quite similarly. We can establish from the swing high of 164.25, we can establish this kind of a trend line. So we got the trend line here. Okay, so that's our this is our trend line. Let me just zoom out to see if there is any technical resistance. Well, there is some kind of a technical resistance, but the market is already bouncing from the lows and it's about to test 100 periods moving average located at 157.81, and there is some sort of the technical resistance as well. So take a look here. Very nice technical resistance tested before by the market participants. 157.75, and we are testing this level right now. So let me just zoom in a little bit. So okay, that's better. Now the support, of course, the support is located here. The first one, the nearest one, is 157.39, so that's the support. The other technical support is located slightly lower. We can have the support at 155.33, 154.36, 153.81, and the key technical support and the swing low is located at 153.18, which is why it's very, very thick. Now, as you can see, we are moving inside of this particular channel. So what we can do is to apply our short-term trend line from the upside. We will leave it in, let's say, this color, So that's the different one. And if we manage to duplicate this line, we can see clearly that this might be some sort of the pattern. This might be a bearish flag pattern. However, for now, this is only a channel. So momentum is as you can see positive at the level of 65 points. We are heading towards the extremely overbought market conditions. If we break above the 100 periods moving average, if we break above the technical resistance, and then if we break above the upper channel line, the outlook might change a little bit in favor of bulls, because it will change to more bullish. Nevertheless, there is